12 subsection 4 and 13 subsection 4 deals with time of supply in case of vouchers. Vouchers means an instrument which can be redeemed in settlement of an obligation to supply goods or services. For example, say I am issuing a voucher to you and you will give that voucher to someone else, and that person will be coming and purchasing some goods or receiving services from me, and as a consideration they will be giving that voucher as settlement to an obligation. So therefore this is what a voucher is. Now these vouchers are divided into two: identifiable vouchers and non-identifiable vouchers. Identifiable vouchers means against which product or service it will be redeemed is known at the time of issuance itself. So I am giving a voucher that can be redeemed against a particular product, or that can be redeemed against a particular service. So I know against which product or service it will be redeemed and the issuer, therefore that is known as identifiable voucher. Non-identifiable voucher means I will be giving a voucher to you and you can redeem it against any product or any service which is supplied by me. I may have multiple products. Say for example, I'm a person who is engaged in sale of garments, footwear. So it's like a multi-product showroom. Mine is a multi-product showroom, and I gave you a voucher worth ₹1000. So you are coming to my shop and you are redeeming that voucher. But I don't know against which product you will be redeeming it, because it's a multi-product showroom. You can redeem it against any product or any service if I am rendering any services. So therefore that is known as non-identifiable voucher. What is the time of supply in case of identifiable voucher? In case of identifiable voucher, the time of supply is at the time of issuance of voucher. Whereas in case of non-identifiable voucher, the time of supply is at the time of redemption, of the voucher, because I don't know, right, against which product or service it will be redeemed. So therefore I need to wait until the time of redemption, and that should be taken as the time of supply. Now, what if the voucher is not at all redeemed? In case of non-identifiable voucher, it will not be a problem. If the voucher is not at all redeemed, the supply will never happen. So therefore, whatever money that I have received for issuance of voucher is not chargeable to any GST. But in case of identifiable voucher, at the time of issuance of voucher itself, it is time of supply, which means I will be paying GST. But that voucher is not redeemed. When that voucher is not redeemed, but I would have already considered as time of supply at the time of issuance of voucher, and I would have paid GST. Now it is not redeemed. So what does it mean when it is not redeemed? Unnecessarily I paid GST, and now I can get it as a refund because I have not made any supply of goods or services, but I paid GST. So in that way we need to understand. Then subsection 5, 12 subsection 5 and 13 subsection 5 deals with time of supply in case when the time of supply cannot be ascertained as per any of the above provisions. Say for example, there is a person who is not at all filing any, who is not at all registered, even though he is liable to get registered. Now department has identified such kind of person, and now for recovery, what should be taken as the time of supply? So whether periodical return has to be filed or not required to be filed. He is not required to file the periodical return because he is an unregistered person. Therefore, whenever he pays GST on the date that is taken as time of supply, on the day, whatever is the rate that is prevailing should be considered. Then, suppose if there is a registered person, but with respect to few supplies, he evaded payment of GST. And when department identifies that, then the due date of filing return pertaining to that period for which it is evaded will be considered as the time of supply, and that is relevant for determining the rate of GSTR. Then next, 12 subsection 6 and 13 subsection 6, in case of any additional consideration received by way of interest or late fee or a penalty for delay in payment of consideration, which we have discussed in revision 2. That is, if there is any delay in payment of consideration, we will be receiving some interest or late fee or penalty. And what should be taken as the time of supply in that case? The time of supply is on receipt basis, not on accrual basis. So just because that person has to pay interest does not mean that we have to pay GST on that. Only when we have actually received that interest or late fee, GST arises, which means that the time of supply is on receipt basis. And that's the reason why a separate note will be given for that purpose, that is known as a debit note. See here. In case of addition to value in the form of interest, late fee, etc. for delay in payment of consideration, as and when the additional consideration is received. So on receipt basis, not on accrual basis. Then look into some additional points here. What should be considered as the date of payment? In case of supplier, the date of entry in the books or date of credit in the bank account, whichever is earlier, should be taken as the date on which payment is received. That is from supplier point of view. I am supplier, you are recipient. From supplier point of view, the date on which I have received the money or the date on which it is credited in my bank account, whichever is earlier. So usually, which is earlier here? Suppose if I receive the money first and thereafter I pass a journal entry, that is the credit in my bank account is first, and then you intimated that you have made the payment, thereafter I will pass a receipt entry, whichever is earlier is the date of credit in my bank account. Suppose if you give me a check and I will be depositing the check, first I will make an entry and then I will deposit, and the date when it gets credited in a bank account will be a later date. So whichever is earlier is the date of entry in the books. In case of recipient, from a recipient point of view, when you need to analyze, from recipient point of view, the date on which recipient bank account gets debited. So when supplier it is bank account credited, when recipient it is bank account debited, or date of entry in the books of the recipient, whichever is earlier. So that is the meaning of date of payment. Then in case of goods covered under FCM, we discussed this point on advances, GST is not payable. And GST is payable only upon invoice as the time of supply is due date of invoice or actual date of invoice, whichever is earlier. But in case of services, it is not that way. That is, GST is payable on advances also. Then we have one special point. That is, whenever I raise an invoice, say for example, if the invoice value is 15,408, like that the invoice value is here, 15,408, and there is a person who might be paying 16,000 as a round number. Rather than paying 15,408, they paid 16,000 as a round number. Now, beyond the invoice, we received some extra consideration. So what is that extra consideration? 592 rupees is received as an extra consideration. With respect to this 592 rupees, what should be taken as the time of supply? If it is goods, anyhow it is due date of invoice or actual date of invoice, whichever is earlier. So there is not at all a problem, even if you have received that extra amount. But when it is services, invoice date or payment date, whichever is earlier. Say this month we received excess, so it may be time of supply this month, but the invoice will be raised in the next month. So whichever is earlier is this month will become the time of supply. So to avoid this kind of situation, so they gave a relief. What is that relief? If you have received 1,000 rupees in excess of the invoice, that is whatever you have received in excess beyond the invoice, that excess should be within 1,000 rupees. In that case, what will be taken as a time of supply? The date of invoice will be taken as a time of supply. It is not the date on which payment is received or invoice, whichever is earlier. So we have two options. Option 1, with respect to the excess amount, take date of invoice as the time of supply. Option 2, with respect to the excess amount, take invoice date or payment date, whichever is earlier. But remember, it is only with respect to rupees 1,000 received in excess of the invoice. So it is not invoice value is 1,000. So invoice value can be anything. So whatever we have received in excess is within 1,000. What if it goes beyond 1,000? This option is not available. That is with respect to third point. Up to 1,000 received in excess of invoice in case of services covered under FCM. Time of supply shall be date of invoice or determined as per section 13 subsection 2. Supplier has the option to choose. Is it with respect to every transaction? Yes. With respect to each transaction, it is not that with respect to all transactions they need to choose the same option. So they can decide. Then point number 4. In case of supply of services between associated enterprises, here associated enterprises is as per section 92A of Income Tax Act. So we have a lot of relationships as per 92A of Income Tax Act. What is the meaning of associated enterprises? So that associated enterprises, and you don't have to remember that for GST purpose. So in exam it will be clearly given. And in case of transaction between associated enterprises, where the supplier associated enterprise is located outside India and the recipient associated enterprise is located in India. It's a case of import of service which is covered under RCM, correct or not? Then we need to go for 13 subsection 3 in case of services covered under RCM. But this is an exception to the 13 subsection 3. What does it say? It says don't take 61st day from the date of invoice or date of payment, whichever is earlier. Take date of entry in the books of recipient or date of payment by the recipient, whichever is earlier. So instead of 61st day from the date of invoice, we have date of entry in the books of recipient. That's the only difference here. So again, I'm repeating, there should be associated enterprises, and where the supplier associated enterprise should be outside India, and where the recipient associated enterprise should be in India, and for which we have separate provision, not the regular provision of 13 subsection 3 is applicable. Date of entry in the books of recipient or date of payment made by the recipient, whichever is earlier, should be taken. Then last point, when goods are taken out for exhibition, that is, there is an exhibition, business exhibition which is held outside India. I am taking the goods to that business exhibition which is held outside India. Now, is it supply? No, it is not a supply, because 7.1 is not attracted as there is no consideration involved, and 7.1c also will not come because it will not come under DRIP. Then it is not a supply. But section 31 subsection 7 says what? Within 6 months from the date of removal, if it is not supply, it is deemed to have been sold. So sale on approval or on return basis. Can we apply that in this context? Yes. So that's the amendment which says that you can apply 31 subsection 7 and interpret that when you have taken the goods out for exhibition. If you are selling that, so that date when it is actually sold will be taken as a time of supply if it happens within 6 months. Within 6 months, if the goods taken out for exhibition is not sold there, then it is deemed to have been sold, and accordingly it is considered as time of supply on expiry of 6 months. When goods are taken outside India for exhibition, it is not a supply. But when the same is not brought back within 6 months, it is deemed to be supply in terms of 31 subsection 7. Now, look into various documents involved in GST. So these are all given in section 31 here. First, tax invoice. Who is required to give tax invoice? Whenever there is a registered person who is making taxable supply of goods, he is required to give a tax invoice. And what is the time limit within which the tax invoice to be given? Already we discussed what is the time limit within which tax invoice to be given. 31 subsection 1, goods, supply involves movement, supply does not involve movement, continuous supply. So we discussed due date of invoice. So that is a time limit within which invoice should be issued. What if supplier is unregistered and that supply is covered under RCM? When the supplier is unregistered but that supply is covered under RCM, now the recipient who is registered will give an invoice to the supplier, but the same time limit here. Then, what if the goods are exempted? What if the goods are exempted goods, or the person is opting for composition scheme? Because a person who is opting for composition scheme cannot give tax invoice, because if he gives tax invoice, he is collecting GST from the customer, so he is not supposed to give tax invoice. Then what is the document that is to be given by a person opting for composition scheme? So a person who is making exempted supplies and a person who is opting for composition scheme is required to give bill of supply. And what is the time limit for issuance of bill of supply? The same time limit, boss. That is, whatever is the time limit that we have for tax invoice, the same time limit is applicable even for bill of supply. Now, we have one provision in this case. What is that? Suppose if there is a low value supply. What is a low value supply? Value of supply less than 200 rupees. So per supply, the value is less than 200 rupees is known as a low value supply. In case of low value supply, invoice is not required to be issued or bill of supply is not required to be issued if 3 conditions are satisfied. What are those 3 conditions? The recipient is unregistered. The recipient is unregistered means it should be B2B supply or B2C supply. B2C supply. And recipient is not in need of invoice. So low value supply means what? Value of supply less than 200. Tax invoice as well as bill of supply is not required if three conditions are satisfied. Condition number 1, it is B2C supply, means recipient should be unregistered. And condition number 2, recipient is not in need of invoice. Condition number 3, a consolidated invoice at the end of the day should be generated with respect to all such low value supplies that happens in that day. Say from morning to evening, say some 100 transactions happened with respect to low value supplies. All these 100 transactions should be mentioned in one invoice and a consolidated invoice should be prepared and generated. So this is for accounting purposes here. Then next, in case of multiplex theaters, even though the value of supply is less than 200, they are supposed to give an invoice that e-ticket whatever is being issued will be considered as invoice. So this is an exception to this point what we have discussed, and that's the latest amendment here. See that note. In case of multiplex theaters, an invoice e-ticket to be issued even if the value of supply is less than 200 rupees. So this is about bill of supply and invoice. Then debit note and credit note, already we discussed in value of supply in revision 2. What is that I said? Whenever there is an increase in the invoice value, debit note. Whenever there is a decrease in the invoice value, credit note. The logic is pretty simple here, because whenever recipient balance in the supplier's books increases, recipient shows what balance? Recipient shows what balance in supplier books? Debit balance. If the debit balance increases, so give a debit note. If the debit balance decreases, when the debit balance decreases, when the invoice value comes down. So when the balance comes down, so then you need to give a credit note. And that's what is given here. The taxable value charged is less. What does it mean? You need to charge additional value, so give a debit note. Tax charged is less. Rather than collecting 12%, you collected 5%. So for collection of the additional tax, you give a debit note. Then next, credit note. Taxable value charged in excess. So I charged more. Now I need to reduce. So give a credit note. Tax charged in excess. I charged 12%, but the rate is only 5%. So I will give a credit note to reduce that rate. Or there is sales return. So I sold the goods and it got returned. Or where the goods and services are deficient. So whenever there is a deficient, recipient asks for a reduction, right? So in that case also I can give a credit note. And who will be giving this debit note or credit note to whom? Only supplier will give the debit note or credit note to the recipient. Recipient will not give it to the supplier. Of course, that concept is there in accounting, but in GST, debit note and credit note to be given by supplier to recipient. Now, can the credit note be given in case of bad debts? No. In case of bad debts, credit note cannot be issued. And specifically, it is disallowed. So because in case of bad debts, you need to bear the risk of loss with respect to GST also. So you will not get any kind of relief. And what is the time limit for issuance of debit note? No time limit. It can be issued any time. So anytime when I am receiving something in excess, I can give a debit note. Whereas when to give a credit note, it is 30th September of the succeeding financial year. That is, the supply takes place in a financial year. Supply takes place in a financial year. Before the September end of the next financial year, that is 30th September of the succeeding financial year, or date of filing annual return. It is not due date here, actual date of filing annual return, whichever is earlier is the time limit. See here, credit note leads to reduction in tax liability. Time limit is there. Debit note leads to increase in the tax liability. So no time limit. Then we have something called as revised tax invoice. What is this revised tax invoice? To understand this revised tax invoice, we need to know first the effective date of registration. Now let's try to understand that. Say with effect from 25/10/2018, a person commenced business here. With effect from 25/10/2018, a person has commenced business. Commencement of business with effect from 25/10/2018. For that financial year, that is 31st March 2019, So that is the end of financial year. End of financial year. We need to see what is the aggregate turnover. We need to see what is the aggregate turnover. And that aggregate turnover is somewhere 30 lakhs. Somewhere 30 lakhs. What does it mean? Which means that we need to check with the threshold limit. Say if the threshold limit applicable, if the applicable threshold limit is 20 lakhs, if the applicable threshold limit is 20 lakhs, whether this person who commences a business is liable to get registered? Yes. Now check when exactly this has crossed 20 lakhs. When it has crossed 20 lakhs. This has crossed 20 lakhs on 5/1/2019. On 5/1/2019, it has crossed 20 lakhs. Now, 5/1/2019 is the date on which that person is liable to get registered and liable to pay GST. Liable to pay GST and get registered. Liable to pay GST and get registered. So it is the date on which that person is liable to pay GST and get registered. 5/1/2019 is the date on which that person is liable to pay GST and get registered. Now, he need to make application within 30 days from that date. So what is that? 5/1/2019. What is 30 days? What is 30 days? What is 30 days from 5/1/2019? So in January, we have 26 days because 31 minus 5, 26 days. And in February, that is 4 days. That is by 4th February 2019, application should be made. Application for registration should be made. Application for registration should be made. If application for registration is made on 4/2/2019, if application for registration is made on 4/2/2019, then the effective date of registration is the date on which that person is liable to get registered. So what will be the effective date of registration here? Effective date of registration is 5/1/2019. What if the application is not made within 30 days? Say for example, if the application for registration is made beyond 30 days. If the application for registration is made beyond 30 days, that is, say the application is made on 20/2/2019. This is the date on which application is made for registration. Application for registration is made on 20/2/2019. Thereafter, he may get the registration certificate on 25/2/2019. Certificate of registration. Certificate of registration. Now, what will be taken as the effective date in this case? In this case, the effective date is certificate of registration, that is 25/2/2019. So therefore, what is that we have understood out of this? If the application for registration is made within 30 days from the date when a person is liable to get registered, the effective date of registration is on the date of liability to get registered, that is 5/1/2019. If application is not made within 30 days, then the date when registration certificate is granted will be taken as the effective date of registration. Now, why we discuss this? Because if we make any supplies after the date when we are liable to get registered, but the registration certificate, say it takes time. So here in the first case, when that person is liable to get registered 5/1/2019 and he makes application on 4/2/2019 and say the registration certificate is granted on 7/2/2019. Certificate granted. Certificate of registration. Certificate of registration granted. Now what is the effective date of registration? 5/1. Between the effective date of registration and the certificate of registration, he will be making some outward supplies. Can he raise tax invoice? He cannot raise tax invoice. Why he cannot raise tax invoice? Because this person has not got the registration certificate. Therefore, he don't know the registration number. He cannot raise tax invoice. But he can raise tax invoice with respect to the supplies which takes place between which period? Between the period that is 5/1/2019 to 7/2/2019. Between these dates, 5/1/2019 to 7/2/2019, between this date, some supply takes place, right? So for those supplies, a tax invoice may not be issued as and when the supply takes place, but the tax invoice can be given after 7/2/2019 within 1 month. That is known as revised tax invoice. So that is, whenever a person is liable to get registered, he may apply for registration within 30 days and thereafter certificate of registration is granted. What will be the effective date of registration? The date that person is liable to get registered. Now from the date till the date he gets certificate of registration, he will be making outward supplies, but with respect to those outward supplies, he cannot collect GST as and when the supply takes place, so he cannot give a tax invoice. So he can give tax invoice after 7/2/2019 within 1 month, and that tax invoice is known as revised tax invoice. So he can recover the GST, yes, but important note here that with respect to B2C supply, it is not possible. It is possible only with respect to B2B supply, because in case of B2C, the recipient will not accept and pay. So due to that reason. Then next, if the application for registration is made beyond 30 days and the certificate of registration is granted, then what will be taken as the effective date of registration? 25/2/2019. That is the effective date of registration. Now, from 5/1/2019 to 25/2/2019. From 5/1/2019 to 25/2/2019. During this period, outward supply will take place. Whether GST is payable? Of course, yes, because the aggregate turnover has exceeded the threshold limit. Therefore, that person is liable to pay GST. Therefore, GST is payable. But can the revised tax invoice be given? No, revised tax invoice cannot be given because the effective date of registration and the grant of registration is on the same date. So revised tax invoice cannot be issued. So what will be the loss in this case? I have to pay GST, but I cannot give revised tax invoice and recover the GST, which means I have to pay GST out of my pocket. So that is a loss here. This is the concept of revised tax invoice. So have a look into this. Every registered person who has been granted registration with effect from a date earlier than the date of issuance of certificate of registration to him, in which case it will be granted if the application is made within 30 days. Look into the below point, effective date of registration. If the application is made within 30 days, what is the effective date of registration? The date such person is liable to register. Whereas if it is not applied within 30 days, the date on which registration is granted. Now, so whenever registration is granted with effect from a date earlier than the date of issuance of certificate of registration, he may issue. Why may? So it's up to him. If he really wanted to recover the GST from their customer, they can issue revised tax invoice in respect of taxable supplies affected during which period? During which period? Very, very important. Effective date, starting from the effective date of registration till the date of issuance of certificate of registration. As if the application is not made within 30 days, the effective date of registration is same as a certificate of registration, so revised tax invoice cannot be issued. So that's what I have given as a note. Revised tax invoice cannot be issued if application for registration is not made within 30 days from the date on which liability arises. And who will give this revised tax invoice? Supplier will give. And what is the time limit for issuance of revised tax invoice? Within 1 month from the date of certificate of registration. Understood? Then next concept is receipt voucher here. Whenever advance is received by the supplier from the recipient, so supplier will be receiving from the recipient advances, and for receiving the advances, invoice will not be raised because invoice needs to be raised on or before the due date as per section 31. So invoice is not raised. Then what is that supplier need to do? He need to give a receipt voucher showing an evidence that the payment is received in advance. See here. supplier receives an advance payment from the recipient. Now supplier has to give the receipt voucher, and note it is required only if the payment is received before issuance of invoice. And who will be giving it to whom? Supplier will be giving it to recipient. And is there any time limit? No time limit. It is said that the receipt voucher should be issued. Then next, payment voucher. Look into the next page. Payment voucher. Whenever the transaction is covered under RCM, that is 9 subsection 3. Whenever the transaction is covered under RCM, that is 9 subsection 3 and 9 subsection 4. Whenever the transaction is covered under RCM, 9 subsection 3 and 9 subsection 4, and the supplier is registered, but the recipient is, supplier is unregistered. Supplier is unregistered, but the recipient is registered. A registered person who is liable to pay tax under 9 subsection 9 subsection 4. We discussed tax invoice to be given. Same way, payment voucher to be given by recipient or supplier. So here, supplier may or may not be registered, but if the transaction is covered under RCM, recipient has to give invoice to the supplier only when the supplier is unregistered. But payment voucher to be given by the recipient to the supplier, whether supplier is registered or not, evidencing the payment that is made by recipient to the supplier. And any time limit for this payment voucher? No time limit. Then next, refund voucher here. What is this refund voucher? When there is a supplier who is receiving some advance from the recipient, a receipt voucher will be given. That is, supplier receives advance payment from the recipient. Supplier will give receipt voucher to the recipient. Now, that supply is cancelled, means the advance needs to be returned. So if no supply, if there is no supply, there is no tax invoice. So supplier has to give a refund voucher to the recipient. What if the refund is given after issuance of tax invoice? Then that name is known as not refund voucher, it is known as credit note. See that note. If amount is refunded after issuance of tax invoice, then a credit note shall be issued by supplier to the recipient. Then next document is delivery challan. What is this delivery challan? Whenever there is supply, if it is taxable, we will be issuing tax invoice. When it is exempted, we will be giving bill of supply. And also remember one interesting point here. In the same transaction, I am making taxable supply as well as exempted supply. Should I give for taxable supplies tax invoice, for exempted supplies bill of supply? No need. There is something called as consolidated invoice cum bill of supply. That is invoice cum bill of supply. So same document, it is invoice cum bill of supply. With respect to taxable supplies, I will mention the tax rate. With respect to exempted supplies, I will not mention any rate. And I can give a single document, no need to give separate documents. What if the transaction is not a supply, but I need to prove that it is not a supply? Goods are moving from one location to another location. In that case, I need to issue a delivery challan. That is, example, there is intrastate movement of goods here. Intrastate movement of goods. Intrastate movement of goods, stock transfer, branch transfer. So intrastate, they may not go for separate registration. Means it is not a transaction between distinct persons. So it is not a supply. But there is movement of goods. So a delivery challan should be accompanied along with the goods. Then goods are sent by manufacturer or principal to a job worker. So it is not a supply because the goods are going to be returned back. But when the goods are sent by principal to the job worker, that goods should accompany a delivery challan. Say this. The consignor may issue a delivery challan for the purpose of supply of liquid gas where the quantity at the time of removal from the place of removal of the supplier is not known. That is, I am taking some liquid gas to the recipient. I don't know how much quantity. I will fill the tanker and I will go. I don't know how much quantity I will be delivering. Depending upon the balance capacity of that particular recipient, I will be filling. So depending upon the quantity I fill, I will be raising invoice. But until that point of time, I am taking it to that location. That should accompany a delivery challan. Who will be giving it to whom? Supplier will be giving it to the recipient. Is there any time limit specified? No time limit specified. Then transportation of goods for job work we discussed. Transportation of goods for reasons other than by way of supply we discussed. Intrastate stock transfer or branch transfer. Such other supplies as may be notified by the board. So not yet notified. So these are the various documents involved which are to be issued by supplier to recipient. So far what we have discussed, when invoice to be issued and what is the time of supply, and we have discussed what are the various documents involved. With that, we completed section 31, section 12 and section 13. In the next video, we will be discussing section 14 and some illustrations on invoice and time of supply.